For years, XRP holders have waited for a single moment that could elevate Ripple's token from courtroom debates to Wall Street screens. That moment may finally arrive on November 13th, 2025. Canary Funds has filed an updated S1 registration for its XRP spot ETF, and for the first time, removed the delaying amendment that kept approval timing in the hands of the U.S. Securities and Exchange Commission. With that clause gone, the countdown clock now belongs to the issuer. If the SEC stays silent and NASDAQ approves the companion 8A listing, the ETF could automatically go live within 20 days. Under Section 8A of the 1933 Securities Act, a registration automatically becomes effective 20 days after filing, unless the SEC objects. Most issuers voluntarily pause that clock with a delaying amendment. Canary's decision to skip it is a strategic power shift, forcing the Commission to act if it wants to stall progress. In a period of government slowdowns and regulatory uncertainty, that mechanism offers a rare shortcut toward market readiness. Even SEC Chair Paul S. Atkins has acknowledged that companies using this long-standing route help maintain market efficiency when bureaucracy slows. While he didn't name XRP directly, the statement landed as an indirect nod of approval for issuers pushing forward through lawful channels. The update lit up analyst circles within hours. Bloomberg's Eric Balchunas called it an interesting maneuver, noting that the XRP ETF paperwork lacked the dense volley of revisions that characterize Solana's spot ETF filing. Less negotiation could mean faster execution, or a riskier bet if regulators raise questions later. Still, Balchunas admitted it's worth a try. Meanwhile, crypto attorney Bill Morgan voiced open enthusiasm. Good to hear that a spot XRP ETF may go live on a specific date, November 13th. For longtime XRP supporters, that sentence felt like history catching up at last. If approved, the Canary XRP spot ETF would let traders and institutions gain exposure to XRP's price inside the same regulated frameworks used for stocks and bonds. No wallets, no private keys, no unregulated exchanges. Shares would mirror XRP's spot performance, held in insured institutional custody with transparent daily valuation and redemption mechanics. It's the same structural leap that transformed Bitcoin and Ethereum from speculative tokens into legitimate portfolio holdings. For mainstream investors who have watched crypto from the sidelines, this could be the first compliant doorway into Ripple's ecosystem. Just a few years ago, Ripple was locked in a bruising legal fight with the SEC over allegations of unregistered securities sales. The eventual ruling that secondary market XRP trades are not securities cleared major clouds but left uncertainty about future oversight. The ETF proposal is therefore more than a product launch. It's an act of rehabilitation. After surviving courtrooms and market skepticism, Ripple now stands to re-enter the U.S. financial system, not as a defendant, but as a ticker symbol. Industry observers say that symbolism alone could shift sentiment across digital asset markets. This push lands during a surge of crypto to ETF crossovers. Spot products for Solana, Hedera, and Litecoin launched earlier this year, proving regulators are slowly opening the door to altcoins beyond Bitcoin and Ethereum. Institutions hungry for diversification are watching closely. The macro backdrop adds fuel. Equity markets remain choppy, fixed income yields volatile, and investors are seeking non-correlated assets. A regulated XRP ETF offers precisely that mix of novelty and legitimacy. By eliminating the delaying amendment, Canary Funds triggered an automatic 20-day countdown under Section 8A. If Nasdaq's 8A registration clears without objection, trading could begin as soon as mid-November. Minor factors such as late SEC comments or operational checks could adjust the timing, but momentum favors a timely debut. Internally, market makers are preparing liquidity lines, custodians are finalizing settlement interfaces, and brokers are scripting compliance language for client disclosures. Every step points toward readiness rather than hesitation. Speculation around the potential launch has already rippled through crypto Twitter and trading desks alike. Optimists expect a price surge similar to Bitcoin's rally ahead of its ETF approval, driven by anticipation of new inflows. Skeptics warn of the usual buy the rumor, sell the news cycle once listing day arrives. Either way, volume expansion is almost inevitable. A spot ETF introduces new liquidity channels, smoother arbitrage between exchanges, and reduced spreads. Factors that historically stabilize long-term pricing, even if short-term volatility spikes. For Wall Street, XRP's entry via ETF form is more than another ticker. It marks the normalization of crypto within mainstream asset management. Registered investment advisors could allocate XRP exposure alongside equities and commodities. Multi-asset funds could treat it as a small but diversifying slice in risk-balanced portfolios. Compliance teams that once saw crypto as off-limits would finally have an SEC-registered structure to justify inclusion. Each approved digital asset ETF strengthens the infrastructure. Custodians, auditors, and clearing systems become more interoperable across the crypto traditional divide. Beyond the excitement, this timing aligns neatly with Ripple's corporate vision. The firm has been expanding partnerships with central and commercial banks for real-time cross-border settlement solutions. Having its native token traded under a regulated ETF umbrella enhances credibility with those same institutions. It paints a picture of maturity, Ripple as both fintech partner and legitimate market participant, not merely a crypto startup. Executives close to the project privately call the ETF a graduation moment. Despite the optimism, several uncertainties remain. The SEC can still request clarifications or raise objections before the auto-effective window closes. Nasdaq must formally approve the 8A registration, and while the filing shift reduces bureaucratic friction, it doesn't eliminate political risk. A change in regulatory leadership or sudden market turmoil could reignite caution. Moreover, ETF success depends on execution quality, tight spreads, active creation, redemption, and reliable price tracking. Without those, investor enthusiasm can evaporate quickly. For analysts, November 13th has become a symbolic test of how far crypto regulation has evolved. If the ETF launches smoothly, it will demonstrate that the U.S. market is ready to absorb altcoin exposure under full compliance. If delays persist, it will underscore that old frictions remain. Either way, the outcome will influence how quickly other issuers, perhaps targeting Cardano or Avalanche, dare to file next. In that sense, XRP's journey could set precedent not just for Ripple but for the next generation of tokenized investment vehicles. Should the ETF go live, the reverberations will extend beyond XRP. Exchanges might see increased derivative interest, liquidity providers could recalibrate spreads across correlated pairs, and DeFi protocols might mirror the move with synthetic ETF tokens or wrapped derivatives. For investors who have waited for clearer bridges between crypto and traditional finance, this would be tangible proof that integration is accelerating. The ETF is not merely a product. It's an infrastructure test of whether digital assets can coexist seamlessly inside legacy systems. For everyday investors, the XRP ETF simplifies exposure. Instead of registering on exchanges or managing self-custody, they'll be able to buy XRP shares in brokerage accounts, track performance on portfolio dashboards, and include it in retirement plans. The product structure provides tax reporting, transparency, and regulatory oversight, features traditional investors rely on. In return, they gain access to an asset with deep global liquidity and growing use in international payments. Beyond economics, narrative drives markets, and the XRP story has dramatic momentum. From legal battles to redemption arcs, Ripple's image has shifted from rebellious outsider to disciplined contender. The ETF announcement reframes that journey. No longer a story of defiance, but of integration. For the wider crypto space, it signals that persistence and compliance can eventually win over regulation. Outside the United States, several regions, Europe, Singapore, and the Middle East, have already embraced token-based exchange products. U.S. approval would close a gap that has long frustrated global investors. Cross-listing potential could follow, allowing European funds to hold U.S.-traded XRP shares, deepening liquidity further. In turn, that could reinforce Ripple's international payment corridor ambitions, tying market performance directly to real-world financial utility. If the ETF launches, Canary Funds will likely trigger a Phase 2 campaign aimed at scaling assets under management. That means courting institutional allocators, marketing to wealth platforms, and ensuring secondary market liquidity through tight spreads and daily creation cycles. Ripple, while not the issuer, will inevitably benefit from renewed attention and increased demand for XRP. The next 12 months could therefore mark a shift from courtroom headlines to quarterly inflow reports, a transformation from controversy to capital. Analysts at BN Crypto predict that if approval proceeds smoothly, XRP could consolidate near $2.50 to $2.70 before testing higher resistance around $3. Others warn that broader macro pressures, interest rate policy, US dollar strength, and ETF fee competition could temper the rally. Either way, volume data suggests a resurgence of interest unseen since 2021. Open interest on futures exchanges has climbed steadily, and whale transactions on-chain are increasing, signaling accumulation ahead of possible institutional inflows. The road to November 13th isn't guaranteed to be smooth, but it is undeniably historic. A successful launch would crown years of perseverance by Ripple and its community, marking the first time a token once mired in legal battles earns its place on a major U.S. exchange in ETF form. It would confirm that crypto assets can graduate from speculation to structure, governed by the same rules yet driven by the same innovation that birthed them. Whether or not the bell rings on that date, the filing itself has already changed the conversation. For the SEC, it's a test of pragmatism. For Ripple, a moment of vindication. For investors, a window into crypto's next chapter. The countdown is running and the world will be watching.